Well, we have all noted that volatility has made a comeback on financial markets since the start of the year. And with the cycle being very mature and many asset classes expensive, this is understandable. So unsurprisingly, investors are looking for flexible and diversified investment strategies. Flexible because you have to adapt to changing markets, and diversified because you just don't want to put all your eggs in the same basket. But today, traditional asset classes, most of them are all expensive, and also they can show an unusual positive correlation. So it does become necessary to search diversification, but beyond traditional asset classes. Generally speaking, a risk premium is the reward associated to the market risk linked to a financial asset. That financial asset, it can be a traditional asset, so obviously equities, sovereign bonds, or corporate credit. But that financial asset can also be non-traditional, and it's in that case where we're going to talk about alternative risk premium. A way to see alternative risk premia is to explain them as tracking or replicating in a systematic way a fraction of alpha which is linked to the performance of an alternative investment strategy, or if you prefer, a hedge fund. So for an investor, it's a way to gain exposure systematically to a non-directional source of performance. An example could be in the fixed income space, a curve premium, or in the equity space, we can think of the quality premia or the low volatility premia, each hedged for market risk. What's really new today is that alternative risk premia can now be easily accessed. They can be accessed in a transparent, liquid and a cost-efficient way, mainly through ETFs or bank indices. In fact, when uncertainty is increasing, it's a great addition to the investment universe to be able to invest into underlyings which by construction are decorrelated from the traditional asset classes. And in terms of performance, we think that alternative risk premia can bring an additional source of performance in a market environment where returns on traditional asset classes could progressively become exhausted. So I think alternative risk premia are much more than just the latest trend. And in fact, in our funds at Lyxor, we are already invested in such strategies.